Securing capital for acquisitions. Today we're going to talk about 5 steps in crafting the optimal narrative when looking for capital to make acquisitions, and one insight that may be a little bit different than what you initially think. So the first step in securing capital for acquisitions is the plan. What is the overarching strategy? What is it that you're trying to accomplish? Is it a growth horizontally in terms of becoming larger in the specific part of the food chain that you occupy or service that you provide? Is it vertical integration of doing something, you're manufacturing a part that you distribute, distributing a part that you manufacture? Is it moving vertically, horizontally? What's the overall plan? The next is sourcing. And so perhaps there's already an acquisition that you've got lined up in the crosshairs, but if not, and you're seeking to make an acquisition or acquisitions, what is the process that's going to be in place to source these, to procure, to originate opportunities to acquire businesses? The next is, what's the structure going to be? And so when you see companies that make multiple acquisitions or are very acquisitive, as the word may be, they tend to have a strategy and a structure that is repeatable. And so X dollars at close, X dollars over time, this type of evaluation applied to this metric, whether it's a revenue, but more often an EBITDA metric for a company, but a repeatable, process-oriented structure that can be implemented to allow for multiple acquisitions. And even if it's just one acquisition, if a structure can be well defined such that it could be repeatable in the future, the probability of attaining the capital that you need is going to be higher. Next is integration. So yes, it's easy to say you're going to buy something, but how is that going to get fused into the existing business? How is that going to integrate? How are there going to be synergies relative to revenue you can get that neither could have gotten on their own? Are you going to have synergies for expenses in terms of when you combine the companies, there's savings? What is the integration? How is that expected to take place, both from a temporal and timing perspective, as well as steps, process, and savings perspective or opportunities perspective? Lastly, what's the runway look like? And so start to finish, what does the time look like? What are the different steps of the exercise? And what does forward looking? Are there going to be future acquisitions being sought out, and under what timing, for how long, and how big is the opportunity set for all of the possible acquisitions that may be doable? And so that leads to an insight that may be contrary to what you think. Sometimes people think if they're asking for less money, there's a higher probability of getting it. But in the world of private equity, private capital, both from a debt and equity perspective, oftentimes a capital provider is going to say, well, if I have to incur a certain amount of brain damage here to evaluate, to undertake an opportunity, well, then if I can deploy more capital and piggyback on that same thesis, on that same level of research, then we'd like to do that. And so oftentimes, if you were to say, hey, I have a path to inject $5 million towards an acquisition, or if you had something that says I have a $5 million initial acquisition followed by 9 other $5 million acquisitions leading to a total capital deployment of over $50 million, well, that's exciting. And though the first deal wants to be sized appropriately in the sense that if you're a company that's making $1 million a year in profit, maybe the first deal is something similar in size or a few orders of magnitude larger, but to say, hey, we make $1 million in profit, we want to buy a $1 billion company, that's going to be difficult. However, if you say, hey, we're a $1 million company and we want to buy 10 $2 million EBITDA companies or 10 $3 million EBITDA companies, and here's the path, and again, going through all of that 5-point checklist, here's the plan, here's how we source, here's how we structure, here's how we integrate, this is what the overall runway looks like, then if you have an overarching thesis of this is how we can deploy $5-10 million up front with another 20, 30, 40 beyond that, that's a really compelling narrative, and that can get a lot of interest. That's a thought for today. Securing capital for an acquisition, because even if it's just one, and even if you don't think it's something that you're going to repeat, having all of these things laid out, having the plan in order, will only help in terms of probability and the terms you ultimately receive. So that's it. Hope the week's going well. Keep pushing forward. God bless. We'll see you next time.